There are lots of business studies terms to learn. Here I will cover the main ones found on a balance sheet. The balance sheet of originals lays out their financial position. On one side, we have total liabilities at £49,200, including long-term loans and creditors. On the other side, total assets which should match this figure. This includes items like stock, equipment, and cash. This alignment or balance ensures accountability. Every pound coming into and leaving the business is tracked. Capital here represents the owner's investment, so they have a foundational claim on this asset. For the balance sheet to work, net profit is added alongside opening capital on the liabilities side. This balancing act shows what is really happening for that year and gives a nice clear record. This example shows the owner's direct involvement, investing £30,000 yet withdrawing £10,900 for personal dividends. The term here is drawings, which has nothing to do with little pictures but is the money that the owner has received back. In this case as a dividend. Liabilities are not just debts but include owner's equity and profits earned. Balancing these with assets is vital because every penny owed, whether to creditors or the owner, needs to tie to something tangible, like equipment or cash. This keeps the business legally and financially in check. Depreciation reflects how assets like machinery lose value over time. For instance, the equipment here has reduced by £600. This adjustment impacts profits, highlighting the real-world wear and tear on tools that businesses rely upon daily. This depreciation is a loss that can be set against tax. Debtors, those who owe the company money, assets, until they aren't. If payments aren't made, they become bad debts, which reduce financial assets. Managing debtors effectively ensures businesses can trust their income flow and avoid unpleasant surprises. Assets come in two forms: fixed, like equipment, and liquid, like cash and stock. Liquid assets are vital since they can swiftly cover costs. For originals, understanding this distinction helps them efficiently allocate resources based on urgency. Lastly, let's talk about working capital, the funds immediately available for use. For originals, current assets minus liabilities equal £18,800. This is the breathing room a company has to meet daily expenses, ensuring smooth operations without financial strain. There are lots of terms here, so if you are using Lesson Box Library, now is the time to add these to your notes for your revision or for your teacher to check.